Welcome to ForexTV.com. Today is Monday, October 20th. I'm Kathleen Reddington with your New York Forex Market Buzz. The dollar gains on the euro for a fourth straight day. And now for a look at the latest headlines from the CEP News Desk. The U.S. will host the first of a series of meetings to discuss reforms and solutions to the financial market crisis. This is in an effort to revamp the 1944 Bretton Woods Agreement, where the current financial architecture was established with the creation of the IMF and the World Bank. The meeting would take place shortly after the November 4th presidential elections. Federal Reserve Chairman Ben Bernanke endorsed a second stimulus package in his testimony this morning. He also said the House should consider initiatives to improve access for credit for consumers, homebuyers, and others, which he said would promote job creation. U.S. leading indicators improved by 0.3% in September after last month's revised 0.9% loss. This is the first time the leading indicator has been in positive territory in the past 5 months. Economists had expected a decline of 0.1%. And Dutch financial giant ING announced on Sunday it would be receiving €10 billion from the Dutch government. The move is part of the government facility plan to lend sound and viable financial enterprises that are facing unexpected external shocks. Today we are joined by Jim Hyerczk of Brew Investment Group. Hi Jim, how are you today?
Okay, Kathleen.
Let's jump right into the questions. The dollar gained strength after Bernanke announced this morning he would approve of another economic stimulus package. Do you think this is just a band-aid to the situation, or will this really help the dollar and the U.S. economy in the long term?
I think in the long term it's going to help the U.S. economy, and the market's reflecting that. Traders believe it should help the U.S. economy and the dollar in the short term. It came as a little bit of a surprise because it looked as if the euro had been building a support base and the pound had been building a support base against the dollar, and many traders were looking for some sort of a breakout rally. Now that that has fizzled, we're setting our targets on much lower prices.
All right, speculators are nearly 100% certain that the Fed will cut interest rates at their next meeting. How will an interest rate cut affect your U.S. dollar strategy?
Well, I think if we make the cut, the initial reaction is going to be the dollar will weaken, but it'll probably be a more of a knee-jerk reaction. I think the global financial community is beginning to recognize that the U.S. is a little bit ahead of everyone else. They started cutting rates back in August of '07, and they continue to cut rates until March because they recognized the financial situation. It wasn't until recently that the other countries started to cut rates. So I think if the United States comes out and slashes the rates again, the other ones are going to follow close behind, so it's not going to have that much of an effect on the dollar. If anything, it's going to show that the Fed is being aggressive about solving the problem, and it may turn into something that provides strength to the dollar.
All right, we've started to see developing countries like Mexico and South Korea hoarding dollars. How is this going to affect the big picture?
Well, I think that they're just doing what other major countries have been doing. China has dollars. Most of Europe has dollars. People want to hang on to dollars. I've seen studies where there's about $4.5 trillion out in the central bank safes, and for a country like Mexico to come along, or maybe some of these other emerging countries to hold on to the dollar, may be the new trend. Definitely, one thing that could be happening is that Mexico could be recognizing that there's a trend that emerging countries are losing investments, so they may want to hang on to what they have, maybe for some leverage somewhere down the road. But I think that if the dollar is the new safe haven, then it's going to it's going to happen. I don't know what the long-term ramifications are, but eventually there'll have to be some sort of circulation to stimulate the economies. But right now, I don't see any problem with maintaining positions in the dollar.
Okay, and switching gears slightly, we've seen the yen under a bit of pressure now as risk appetite starts to come back a little bit. It was up on the dollar earlier in the day, as well as the yen being up on the euro. What is your strategy for the yen going forward?
I think the yen is going to be under pressure. I'm looking for continuous strength in the stock market. I think that that's going to increase interest in the carry trade once again, and I'm looking for the yen to weaken. I think they are in a position where they really can't cut rates or do anything there, and it's basically going to be used as a carry trade, as I said. And if the stock market does firm, if we have put in a bottom, then I think traders are going to have to get aggressive, and they will be selling the yen.
Thanks for joining us today, Jim.
Thank you, Kathleen.
This has been your New York Forex Market Buzz with Jim Hyerczk of Brewer Investment. I'm Kathleen Reddington. Join us later this afternoon for PM Exchange right here on ForexTV.com.